Hey, good day, active trend traders. This is Dennis Wilborn. I want to welcome you to the Art and Science of Active Trend Trading update. This is for the weekend of October 21st, 2018. I want to remind everybody that all the materials we present are for trading purposes only. Traders should always pay for trading a new method prior to the risk of their own personal capital. We at Active Trend Trading, basically, I focus on providing to clarify, simplify, and multiply what we are doing. And listening to thinking about when we put that motto in place. It was a long time ago, and it's still very applicable today. So, hey, let's get in here. What are we intending to do with this video? We want to keep it short, sweet, to the point, 10 to 15 minutes max, to appreciate your time and be respectful of your time. So the weekly update is going to contain one, market technicals, potential bonus setups, trades, other market driving events. We're going to do a technical mechanical tip also every week. And right now, the market's been very, very weak. And so we want to find the strong stocks. And this is kind of it's not a repeat, but it's just an addition to what we talked about last week. Look at when the market is in a correction, you want to look for stocks that are floating to the top. Very important, because those are the ones that are the big winners. So an article on IBD, just share with you really quick, the 3 ways the bulls could win the current correction. Inevitably, the bulls tend to always win. You go back even to 1929 when we had the big crash. The bulls eventually won. And the bull, and basically the market is in a bull market more often than it's in a bear market, and the bulls tend to last longer. So the longer term tendency is, of course, up and to the right with your charts. But the 3 ways they can win. One, first, the pool cut. Here's an indication that we may be approaching a bottom when the put call ratio closes in on 1.24. Or 1.25, somewhere around there. It is in those areas flashing. Last time I was up there, March, April this past year, rallied from there. Secondly, October has a reputation of being the month that you get the bid to go into the end of the year. We've been talking about that all year with regarding seasonality. Then third, this is something you didn't really have to worry about so much in the past, but now algorithms and computerized trading does, in fact, push the market around, and we have to remember as small traders, we basically just have to recognize the wake that is being caused by these larger entities doing their trading and get on board and stay on it for a short ride, get our profits, get out. Algorithms drive 60 to 90% of daily volume. So if you think, the 100, 200, 300,000 shares of whatever you're buying is basically driving the market, it's not true. So one thing that could mess this whole thing up, of course, is the economy did go into recession. How far are we away from a bear market, you might ask? Well, we'll take a look at that just briefly. And so we're going to be taking a look at market sell-offs. Look for the strong. That's what we want to do. We want to look at existing watch lists, and also IBD watch lists. Be nimble, avoid big losses. Start with the end in mind. I have to say that is so important. Where we may be expecting, let's say during a normal bullish market, especially at the very first part of it, you'll get all kinds of runners that get up there 10, 15, 20% or more. And so you can target the larger runs. With a market in correction, sometimes you have to reduce your expectations down to 5, 10, 15%, and then be ready to take your profits off the table because of the whipsaw nature of the markets. So here's an area that we always provide. And if you go to our website and look under the Art and Science of Active Trend Trading, it's one of our free sections on the website, you'll find 3 different lists. One, and they're basically lists that are put together, that I put together every week. As in this particular one is a composite of of all the premium lists that IBD puts out. And then basically I look and see which one comes out on multiple lists, and then I provide you a list of this. And this happens on a weekly. And so it highlights somewhere between 7 to 10, up to 14 stocks to just take a look at. These are the ones that are being shown up on multiple lists. If they're in a pullback position where they're close to a buy, hey, might be something interesting that you want to join the institutions in buying them. Secondly, then we take a look at seasonality. Of course, here's where oil is. You know, is oil going to get a sell-off? It's kind of interesting. Oil has been really, really nice uptrend almost since February. The chart of oil looks a lot like this seasonality chart. Normally this time of year, what do we get? We get a sell-off into the end of the year. The Russell, I'm looking for Russell's been in a big pullback, the weakest of the entities, the index that we follow. But typically in the October timeframe, and we're moving into the last phase of October, we'll get a bid into the end of the year. And this is that thing that we were talking about. Normally towards the end of October, all the indexes run into a year-end scramble. And then last but not least, before we look at some charts, just a heads up, the market action points, we've already had a pre-release to early warning alert members so that they could basically join in early with the market action points. This is basically a very simplified timing process. And when I say simplified, is probably not the right term, but it's where we have several trading points, action points during the year, both major and minor. We reflect on those, we try to capture those, and here's what we've found out, that with a non-leveraged ETF, the IWM, that emulates the Russell, from 2002 to 2017, MAPS has done a wonderful job of beating the markets and also beating what our previous service was. So be waiting, be standing by, because you're going to get an opportunity in the very near future, I would say within the next 2 weeks, to become a charter member. And for people who become charter members, we're going to be offering this at a special price, at least through the end of the year, and then, or at least through, I would say, November, and then it'll jump back to to the actual pricings of about $899 per year. So just be on the lookout. Consistently has beat the market over the last few years. So with all that being said, as always, hey, trade wisely, profitably, take time to enjoy the journey. And there I am with one of my grandchildren. That's my granddaughter, only granddaughter, enjoying the beach out at Hanama Bay. So that's what I like about trading for a living, because it allows me to do that kind of stuff. So hey, let's take a real quick look. What is out there to trade? And I wanted to take a couple of different looks. One, of course, there we go. Here's what I'm looking for. I'm going to roll this over here. One way you can look for stocks that are doing well or not, are basically in a bear market. How do I find stocks that are doing well? Well, one of the things to look at, which ones are holding up the best. And as we can see here, I'm going to expand this. Wish I could shrink this down a little bit, but I'm going to be highlighting this level over here. And this is the close, the price action close of the various stocks versus the 50-day moving average. When a entity or when a stock ETF is above the 50-day moving average, oftentimes people consider that a good sign, and especially with the indexes, because where's the indexes at? Well, the indexes are hanging out down there about their 200-day moving average. So any stock that is above its 50 is doing better than the indexes. And so that's a really quick way to go, okay, hey, look at, and this is a list of 188 stocks. This is the running list. And as you can see, there is only about 20 stocks now of that 188 that are above the 50-day moving average. Another place to hone in is when you set up your watch list and you have this as a sort factor. Look for the prices that are close to the 50-day moving average. Now, why do we want to do that? And I'll show you here in a second. We want to do that, and a couple of these names are, you look over here, see what those names are. and we'll go to the individuals, but let's start up here at SUPN, and we'll go down to TSCO, about that area there. And again, those close to the zero line are oftentimes close to where they're going to bounce. They're either going to bounce or they're going to break down further. So if we're getting reversal signals, that might give us an opportunity to go ahead and get into a trade on those, even though, and again, these are the stocks that float to the surface. Now, if you want to go and do this in a smaller list, you can do that also. You can take the IBD 50 list. You can take the fundamentally strong list, which is the IBD 50, but sorted by fundamentals. Do the same sort. This pops up. And so let's run over and take a look at the actual stocks that, or what the charts of these stocks look like. Okay, why is it not moving? There we go. Okay, I'm going to go here, pull up the daily weekly chart. That'll give us a good enough picture. And I'm going to go into those charts that we had talked about. We said we're going to start up here at SUPN. It is currently sitting just slightly below its 50-day moving average. And here we go. As you can see, daily chart. What's it looking like? Well, before we go do that, let's take a real quick look at what are we seeing on the spiders. SPY, big sell-off, dropping back below its 200-day moving average. That's negative. That's showing that, hey, things could continue to go on down. This is very interesting. If you want to take a look, and I know I changed course on this for just for a second, but I want to highlight this really quickly to give us, I don't want it to go away. But on the okay, look what we have going on here. See that? We've got a flagpole that goes from there to there. We've got a little bit of a flag or a pennant that's going out. This breaks to the downside. The downside trajectory is about the extension of the flagpole. Just keep that in mind. On a daily chart, this is a bearish kind of formation, especially since we've closed back below the 200-day moving average right there. Let's get rid of that. So as we can see, weakness on the S&P, QQQ. Same type of pattern is shaping up. Okay, a little bit of downside, very steep. Again, closing above the 200 but below the 100, still showing weakness. IWM. Again, IWM definitely showing some parallel. We can look at the same type of procedure. We go from here to here. That breaks out the bottom. Where might that put us? Well, let's go over to let's just real quick take a look. If this is a flag type formation, and when I say a flagpole type formation, it's putting in its, and let's say it breaks, so let's say it breaks from Friday's close downward, then it may take a couple of weeks to do that. Where might IWM go to? Well, how about that? Right back down into a level of support where it bounced from before. What kind of total, what kind of a total move is that? Right there, we're talking about 23%. So if it does in fact drop down into that past support resistance area, about 137-ish, it's about a 20% gain. That would characterize and qualify IWM for being in a bear market. Ain't there? It's not. It ain't there yet. It's not there yet. So what's holding up well? Well, just again, let's go back to SUPN. I'm going to just run through 5 stocks very quickly. SUPN, is it holding up better on a daily chart than the indexes? You betcha. We've got a nice cluster here. Got earnings coming up, and so When I say a cluster, I'm talking about the cluster of the moving averages. Breaks out above it. It's probably going to continue to head up. A nice little formation here. Drop a line right across here to here. That would be your downtrend line. Breaks up above that. It's probably going to continue to head back up towards the 62 level. Next, CTRE. Again, is it holding up better than the indexes? Yes, it is. It had went down below the 100, but now it's bouncing back up. Looks kind of positive. Not, again, earnings coming up, but this is kind of a, this is a really deep cup, pulled back up, pulled back into the, in this case, the 200-day, the 40-week moving average, which equates to the 200-day, and is now bouncing from that. Would I want to buy this right now? I don't necessarily really like it because it really hasn't done a total reversal yet. Again, what's PSX? It's holding up pretty well. Earnings coming up shortly. WP. Again, same type of flag formation. So could go either way. If the markets rally, this could also rally back up to the past highs. MDX. I kind of like this. It's holding right here at 5. It's not, the kind of how much more kind of shares that trade on a daily basis. It's way below, because I want to trade stocks that are, $15, $20 or more. And so that would throw that one out for me. Again, this is the running list, BSX. BSX looking kind of weak, like it's breaking back down. Worth keeping an eye around about the 36 level, but this looks like a failed rally. Now I'm heading on back down to find another level of support, ARRT. Now this is where we went positive. These are up above the 200-day, 50-day moving average. No reversal signal. 60 is support. ZBRA. Again, holding above. Again, with this big bearish engulfing that we happened on Friday, looking more like it's going to have a tendency to be a failed rally attempt. However, it could continue to rally. It's got earnings coming up on the 6th. Nomad. Okay, this looks interesting. Why? Well, we came back up, overshot, came back down into the moving averages. The thing I don't like about this chart is it's not moving very much. I mean, from here to here is about 10 points. Not a lot of movement, and so, or 10%, not a lot of movement, but sometimes that's what happens also. Plus, I don't like where the daily TSI is, but the volume looking pretty positive. So let's see, and we're going to go WHD. Again, looks like it's holding up right at the 20. Could get a nice bounce. Fairly low risk area to venture a potential buy-in. Got strong support down at the 36. Again, how kind of a move would it get? About 10% if it moved back to its past highs. And then lastly, the one we're going to last go through is Tractor Supply. Again, holding up. Tractor Supply holding up at the 50-day moving average, and but not really, it's kind of interesting. As we were selling off, even though it's just a small sell-off, the volume was starting to increase, earnings coming up here. What about, and I'll go all the way up to the top of the list. Here's two of the stocks that we looked at last week. Wing, W-I-N-G. Again, it is well above the 50. Shooting star on a weekly chart, which could lead us to think that, hey, we may be going to go back down and test at the below the 50. Maybe not. It is respecting the 50-34 line, and so it does have earnings coming up on 10/29. That is Tuesday or Monday of week after next. Wing and then WRD. WRD. It is at support. We have a candlestick that is just hanging right there, holding the 200-day moving average. We have not quite a really good reversal candle yet, has not reclaimed the 50. So it's below the 50, but at the same time, we're going to see if it's going to hold here. It also has earnings coming up on the 7th of November, the day before my birthday. And so this could very well, if the market catches a bid here, it's going to bounce off the support and run probably back up to the 24 level. What is that? What's that going to turn out? Okay, that's about a 9% gain. And that would be not a bad, 5 to 10% run over earnings. Great deal. So that'll give you a couple of ideas on things to chase and how to assess and evaluate the markets. And again, we are after just, I'm going to throw out one other thing, and that was, hold on just a second. Let me find my, here it is. Okay. This last thing, this is our sorted list. And those, see the top 4 here? Those are the strongest, fundamentally strongest IBD stocks going into this weekend. So Venom also turned out to be number 1 on the IBD 50 list, looking like it may be trying to, I like that. Why do I like it? One, it's really close to the 200-day moving average where it broke out of before, or the 100-day moving average, excuse me. Everything looks like it's in gear to do a bounce. I'm getting a little bit of positive divergence. Venom looks kind of good. It has earnings coming up on the 29th after market. What would I expect out of it? 5 to 10%, or it could basically come down here, pick up a bit here, go up to the 34 20 line or the 50, which is going to be about 5%. So my expectations would be limited. So that's that one. VDP. This turns out, this is a really actually pretty good list, guys. Still facing down, no reversal signals yet, but I am getting some positive divergence. Earnings coming up. So keep your eye on that one. Grub. Again, Grub is in a downtrend. It is below the 100-day moving average. Looks like it wants to go on down here and retest at about the 200-day. Earnings coming up. Yes, earnings coming up. Match, M-A-T-C-H. Okay, look at that. Got above this channel, is now falling back down into it, below the 50 on increasing volume. So watch this one because we may get a retest down here at the 100-day moving average. TSI may turn out to be positive divergence. So match may give us an opportunity. And last but not least, Paycom. Again, Paycom just kind of broke out this channel here. It has earnings coming up. It's trying to hang in above the 100-day moving average. Again, on a weekly chart, it's got support down here somewhere between from where it's at down to the 120 or 114, 116 level, where you got to bounce off of that. Be aware of what, it's still in a nice uptrend. And last but not least, those of you who are looking for potential new highs with the marijuana stocks, I want to keep watching this one. It may give us some opportunities in the very near future. Very wild and crazy, as you can see. It dropped from just 59 down to 45. That turns out to be a 22% drop. And I guess it was coming down from a high. Anyway, I want to keep our eyeball on this one. It seems like the marijuana stocks are going to continue to be a hot seller. If the recession, if our economy does go into a recession, will the marijuana stocks actually be a good recession type stock? I don't know, but we'll find out. So, hey, until next time, again, I just say aloha. God bless everybody. Thank you for joining me today. Have an absolutely fantastic rest of your weekend. So, God bless, and have a good one.